And now say hello to Andrew Harrington. Andrew is the owner of AHV Associates, financial advisory in London. Hello, how are you, Andrew?
Nils, very well. Thank you very much for inviting me.
Absolute pleasure. Good to have you. Tell us what do you do? Who is AHV?
Well, I'm the AH, and the original founder partner was HV, and he and I were in business together for many years, and then he decided to retire a few years ago, but I kept the name. And we're an investment banking boutique based in London. We specialize in mergers and acquisitions and capital raising. We do a lot of work in hospitality around Europe, and been around 20 years. My background is investment banking. I was 10 years at Salomon Brothers, and we're small and boutique. We have 4 full-time employees, and it's been great fun.
Great fun. I think that's the first step. Is it still great fun? I mean, we're living through an unprecedented time, and there are those on the one side who are completely shaky, and the other ones who say it'll be fine. Is it still fun for you?
Yes, of course it is. I mean, Niels, I started getting involved in investment banking in 1988 after the stock market crash. That was sort of a unique event that everybody said was going to change the world. Then we had the bond market crash in 1994, which was a unique event that was going to change the world. Then we had the dot-com crash and 9/11 in 2001. Boy, that was a unique event that was going to change the world. And then we had the global financial crisis, ... So, you know, this is a very unusual event, and it will change the world, just like every one of the others have changed the world, right? But there will still be a need for capital. There will still be a need to buy and sell businesses. There's huge amounts of capital around now. There's lots of interesting people who are active in hospitality. And the answer to your question is, I absolutely enjoy what I do. Meet some very, very interesting people. I only act for privately owned businesses. Meet some very, very interesting people, and do our best to help them.
Now, you said buying and selling. Will there be blood on the carpet, as it were? Will there be lots of distress? I mean, we've got a lot of hotels the world over. Europe, down here in South Africa, in other regions, lots of hotels that are closed right now, that are bleeding. Do you find, or do you foresee that a lot of them will be up for sale?
Well, the answer to the question is, I mean, it's yes and no, right? I mean, it's always yes and no. There will be hotels and hotel companies that will go bankrupt, right? And there'll be individual hotels that will go bankrupt. There'll be other hotels that will be put into insolvency by lenders, right? The vast bulk of hotels, the vast bulk of hospitality companies will not, right? The marginal ones will generally tend to be the ones that will get into a distressed state. I heard this morning of a couple of hotels, very fashionable hotels in East London that aren't going to make it, right? But there are plenty that will, and there's new developments that will come up and new ideas that will come up. I mean, there's a lot of talk about having these, you know, some hotels transform into properties that cope with office workers who want to stay 2 or 3 nights a week in a hotel so they can go to the office, but then go home for the rest of the week. And there's talk about repositioning common areas to be co-working areas. So the vast bulk of the industry will survive, right? Some will reshape to other things, and some will go under. But that's always happened. Every year that happens. Now, the difference with this crisis and other crises, particularly the global financial crisis, is that there is huge amounts of money available. Bank capital is twice what it was after the global financial crisis. There's massive amounts of money that's being pumped into the economy by the government. Interest rates are rock bottom. So the things that caused the big distressed asset sales in the late 2000s are not there. The reason why there was so much asset sales in the late 2000s is interest rates were high, spreads were declining, bank balance sheets were tiny, there was a real question mark over the viability of many banks. None of that is there. So in my view, it will be the players that were marginal beforehand will go under, right? Some marginal projects won't get financed, but the vast bulk of the industry will recover and will stay solvent.
So it really is calling for innovation. It's calling to adapt, and it's kind of clearing out, as you say, marginal ones, some that were not built on very solid foundations, and so forth.
Hotels that needed investment that never got it, maybe tired brands, tired locations, that sort of thing.
So in your mind, we will not see the pictures that some people have already shown, because it may have happened a couple of times, but I think there's also the press that's creating a bit of an atmosphere of fear, possibly, but that we will have these hoarded up and boarded up buildings that fall into disrepair and bring down a neighborhood, and all those horror scenarios that some people are painting.
Yeah, I mean, maybe some, right? And it obviously depends on where you are in the world and the specific economic situation, but certainly I would say in the UK, any marginal hotels will be converted into residential where there's a chronic shortage, right? In other parts of Europe, probably similar, or maybe repositioned to apart hotels or something like that.
Yeah. Look, as you know, and as the background shows, I'm sitting in Cape Town. I don't know, the banks certainly here in South Africa have not understood hotel assets that well. I don't know what it's like in the UK. Are they changing either way due to this crisis? Are they understanding it a bit better? Because if you look at the last 10 years, the asset class hotels has done very, very well. In the longer term, if one understands that is a long-term period, it's not a couple of years that you get in and then you get out again. Are they understanding it better? Are they changing their attitude either way?
The answer is, I'm sorry, it's yes and no, right? Because the driving force towards bank strategy is the volume of money available, right? They have huge amounts of money. So no serious bank can afford not to look at the hospitality sector, because it's a means through which they can lend money which is on their balance sheet earning nothing, because government debt is not yielding anything, right? Now, having said all that, there are some lenders who are just looking after their current customers. That's all they're doing right now, just looking after their current customers. There are some amongst the challenger bank community, right, and the debt funds who are very keen to invest in hospitality because they see an opportunity, they see assets, high quality assets in city centres that are going to come back, and they have an opportunity to lend maybe at higher spreads than they would otherwise. So again, it's those who were interested are still interested. Those who are challenger banks and have lots of money to invest are most certainly looking at it because it's a means through which they can lend. Those who are never interested are probably not going to be interested right now.
Yeah, I suppose that, again, they probably run scared because of the prominent position that closed hotels. When a hotel closes, it's more prominent than when a half an office building closes, because they have got vacancy rates that are higher than usual. So I think,
but if you lend at 50% loan to value, even on a reduced value, even if that hotel was repurposed to offices, or probably in offices, residential or co-living or something, you're going to get your money back, right? If it's in London or in Manchester, or in Bristol or in Paris or in Frankfurt or whatever. So certain assets are still safe investments from a lending perspective. But your point is correct. You've got to understand what to do with them, or understand what the downside protection is, right?
And also, I mean, I think when you look now at how attractive office space would be, I mean, I would dare to say, and I'm certainly no expert there, that office space right now is not the one that you necessarily would want to get into with the repurposing of some hotels, but also with people having learned to work from home, and companies letting people work from home and reducing their space.
Yeah, but even, there are, in London right now, there are companies that provide serviced offices that are doing very, very well, right? I mean, there's this idea, in my view, that offices are going to go, it's just hogwash, right? They will change.
Yes. There will be more service. There will be less like some companies taking whole floors of offices. There will be,
Exactly. So the overall amount of office space required will probably diminish, probably not by a lot, but diminish, right? The types, there'll be some change in office space, etc., in the types of office space, etc., etc. And with hotels, what you're going to find is some hotels in city centres are going to change some of the common areas so that there's co-working there, so that people can come in for a few days a week, work from the hotel or work from their office or have meetings, whatever, stay there. There'll be a special rate. They can use the co-working area, and then they commit to a certain number of nights per month, and they get their clothes cleaned and ready for when they come. So there's these new areas of demand that will emerge in hospitality. That is emerging now. What I've just described to you is what some hoteliers are doing right now in London, right? So the nature of office space will change, and there'll be an element of hospitality getting into that space.
Yeah, as we said just now, I think it's the innovation that's called for, and most crises kind of push you to innovate and get out of your comfort zone and look at things differently and whatever. I think in our round table a couple of days ago, you mentioned, you made the comment of this crisis pushing us to become more efficient. With the reception desk that I personally, as a hotel operator, always thought I'd much rather have that receptionist being in the lobby to greet people properly than hiding behind a big block of concrete or wood.
Paper around. You don't want them to put paper around.
And all that stuff can now be done through normal software and be it the phone or be it any other device that lets you in and check in and check out and whatever. Yeah. Now, to come back to the investment part, a discount rate on top to cover for crises like this, what would you say needs to be put on there?
Yeah, well, Nils, I'm going to say something very controversial here, which is I do not think discount rates will change, right? I don't think cap rates will change. And the reason why is that government bond rates have come down. So you have the same discount at the same cap rate, you're embedding a higher risk premium. So my view is for high quality assets, valuations aren't going to change, right? For low quality assets, they will, right? But certainly the starting point will be for the best assets, valuations ain't going to change, in my view. Best assets being in city centre locations in the major cities, the traditional assets that people want to buy.
Yeah, look, I think, as you said, if things are going back to whatever normal was or normal will be, I don't think, I'm not talking about a friend of mine said the other day, not a new normal, it's the next normal. So when the next normal will be similar to what we had before, I think it's a positive outlook, for which I thank you, because I'm a positive person myself, and I sometimes get a little bit depressed hanging around people who want to get us down. You certainly don't do that. Andrew Harrington, thank you so much for your time. Really appreciate it, and I look forward to seeing you in person really, really soon. Thanks, Andrew Harrington.
Thanks a lot. Thank you very much.
Thank you.